According to the Financial Times, the latest coverage on Palantir Technologies focuses less on its software and more on the price of its politics, arguing that political backlash may begin to threaten the core of what the article frames as a gigantic, systemically important business. In this episode, we are going to unpack what that means for stock investors and market watchers who follow POTR. According to Financial Times News, Palantir has gradually moved from being just another data analytics contractor into something closer to political lightning rod. Its close alignment with Western security establishments, its outspoken leadership, and its willingness to take controversial government contracts have created a brand identity that is unusually political for a software company. For investors, this raises a series of questions about revenue durability, regulatory risk, customer concentration, and valuation sustainability. Financial Times mentions that Palantir's politics are not a side issue, they are deeply entangled with the very nature of the company's business. The core pitch of Palantir's platforms is that they help governments and large enterprises analyze complex data sets for security, defense, and critical infrastructure. That makes the company's fortunes tightly linked to defense spending cycles, geopolitical tensions, and public perceptions of how far governments should go in surveillance and data-driven decision-making. From an equity investor's perspective, Palantir's political positioning cuts both ways. On the positive side, a strong identity as a national security partner can help entrench the firm within defense and intelligence budgets, especially in an era of renewed great power competition, cyber threats, and rising attention to critical infrastructure protection. That kind of embeddedness can produce sticky, recurring revenue, long contract durations, and high switching costs. Markets often reward that with premium multiples when investors believe those cash flows are resilient. On the other hand, the same identity can create meaningful headwinds. Palantir's reputation for aggressive engagement with controversial contracts has triggered protests from activists, civil liberties organizations, and even employees in some parts of the tech ecosystem. That can make recruitment more challenging among top-tier engineers who have abundant alternatives, especially in regions or demographic groups with strong privacy and human rights concerns. Talent constraints, in turn, shape product innovation and the speed at which Palantir can scale into new markets. According to the Financial Times, a key concern is that pushback against Palantir's politics could begin to affect contracts themselves. Public sector clients operate in a political environment. Lawmakers, regulators, and oversight bodies can be sensitive to public opinion. If Palantir becomes synonymous with controversial surveillance or military programs, some agencies might prefer competitors that carry less political baggage, even if Palantir's technology remains strong. For investors, that translates into contract risk and pipeline risk. When you look at Palantir's revenue mix, a substantial portion historically comes from government customers. That concentration can be a strength, but it is also a vulnerability if any segment of those clients starts to reconsider future awards due to public or political pressure. A few high-profile contract losses or non-renewals could shift sentiment in the equity market quickly, especially when expectations are lofty. Financial Times mentions that Palantir is often valued as a strategic national security asset rather than as a typical enterprise software vendor. That premium narrative assumes continued political alignment between Palantir's leadership and the governments it serves, and assumes that those governments will ignore public criticism when awarding sensitive contracts. If the political climate changes, or if opposition parties make Palantir's work a campaign issue, investors need to consider the scenario where that premium narrows. Another layer for stock enthusiasts to consider is international expansion. Palantir has made efforts to grow outside the United States, in Europe and other ally markets. However, the politics that help in Washington can be a liability in Brussels, Berlin, or other capitals where data protection regimes are stricter and public opinion on surveillance is more skeptical. The firm's association with American intelligence and defense can trigger concerns about data sovereignty and legal exposure under foreign privacy laws. For an equity thesis that depends on long-run global adoption of Palantir's platforms, this friction matters. If some governments or large enterprises view Palantir as too politically charged or too closely tied to U.S. security agencies, that can limit the total addressable market in practice, even if the theoretical need for data-driven security analytics is massive. Investors should weigh the difference between addressable demand on paper and the politically filtered demand that actually turns into contracts. According to Financial Times News, there is also a cultural and governance dimension. Palantir's leadership, especially its co-founder and chief executive, has often engaged in highly public, sometimes provocative commentary about politics, universities, and rival tech companies. While that resonates with some shareholders who see it as principled clarity, it can alienate other stakeholders. Boards and investors typically prefer management teams that minimize avoidable political risk, especially for businesses reliant on government relations. From a governance risk standpoint, vocal political positioning by leadership can complicate relationships with existing and potential customers. A government client controlled by one political coalition may be happy to award contracts to a company whose leadership speaks their language. A subsequent administration with different priorities may be less enthusiastic. That introduces a political cycle element into contract stability which long-term investors should not ignore. According to the Financial Times, the central concern is that Palantir's politics are now so visible that they could overshadow the technology story. Public markets can be fickle. When sentiment shifts, the narrative can move from indispensable security partner to politically exposed contractor in a relatively short period. That narrative shift can amplify share price volatility, because Palantir's valuation has often been built on strong expectations about future growth and strategic importance, rather than just on current earnings power. For investors evaluating PLTR, one practical approach is to think in scenarios. In a favorable scenario, geopolitical tensions remain elevated, allied governments increase security and defense digitalization budgets, and Palantir's controversial image is reframed as necessary realism in a dangerous world. Under that path, its strong government relationships and defense-oriented brand could support sustained growth, margin expansion, and a durable premium multiple. In a less favorable scenario, sustained pushback from civil society groups, privacy advocates, and some political factions leads to tighter regulations around surveillance, data integration, and AI-driven decision tools. Government agencies may adopt stricter procurement criteria, including human rights and privacy impact assessments that disadvantage vendors seen as politically aggressive. Under that path, Palantir's politics could slow new business wins, increase legal and compliance costs, and compress valuation. Another angle for stock enthusiasts is the balance between government and commercial revenue. Palantir has been working to grow its commercial segment, pitching itself as a platform for logistics, supply chain optimization, financial risk, and industrial operations. The more diversified and commercially balanced Palantir becomes, the less its fortunes depend strictly on government contracts and the politics that surround them. However, according to Financial Times, the company's brand in the public imagination is still overwhelmingly defined by national security and intelligence work. That brand perception may deter some commercial clients who prefer lower-profile technology partners for sensitive internal data projects, particularly in sectors like consumer internet, media, and retail that are sensitive to public image and customer trust. Investors should track whether Palantir can meaningfully reposition its brand in the commercial segment or whether its political identity continues to dominate. For long-term equity holders, risk management often comes down to position sizing and time horizon. If you believe that the world is headed toward structurally higher defense and security spending, and that Western governments will keep leaning on Palantir as a key vendor, then the current political controversy may look like noise relative to the scale of the opportunity. In that framework, volatility created by negative headlines or activist campaigns could be a buying opportunity, assuming you have high conviction in management and technology. If, instead, you are concerned that regulatory tightening around AI, data privacy, and surveillance will escalate, then the politics described by the Financial Times become a fundamental threat to Palantir's margin profile and growth runway. In that case, you might see Palantir as a higher beta, more speculative security, where any re-rating of the sector or a shift in public procurement rules could have outsized impact on the share price. That might call for a more tactical approach, or for avoiding exposure altogether. According to Financial Times News, another subtle point is index and passive ownership. As Palantir's market capitalization and index weights grow, more passive capital becomes tied to the stock. If political controversy leads to exclusion from certain ESG-focused indices or portfolios, that can affect demand for the shares at the margin. While these flows do not determine intrinsic value, they influence trading dynamics, liquidity, and short-term price behavior, which active investors should keep in mind. For podcast listeners who follow the company closely, it is important to separate personal views about Palantir's politics from the analytical task of assessing investment risk and reward. You can agree or disagree with the company's positions on surveillance, defense, and national security, yet still recognize that those positions shape the probability distribution of future outcomes. The Financial Times is effectively arguing that this political factor is now central, not peripheral, to Palantir's equity story. When you think about valuation, narrative risk is not easily modeled in a spreadsheet, but it does matter. A company tied to sensitive geopolitical functions will live and die partly by policy decisions and public mood, not just by product features or sales execution. Investors who ignore that are, in effect, betting that politics will always remain favorable. The latest coverage suggests that assumption may be increasingly fragile. In closing, the key takeaway from the Financial Times perspective is that Palantir's politics are no longer just a backdrop, they are becoming a potential constraint on growth as well as a source of advantage. For PLTR shareholders and enthusiasts, the task is to track how that balance evolves over time, to watch contract announcements, regulatory developments, and shifts in public discourse, and to decide whether the current price fairly compensates for both the upside and the very particular political risks embedded in this business. Thanks for listening to this episode. If you found this analysis useful, consider subscribing so you don't miss future deep dives into the stories behind the stocks you follow.